Hello viewers, welcome to the Advanced Technical Analysis to my YouTube channel. Today in this video presentation, would like to explain about the State Bank of India stock price that has formed the inverse head and shoulder chart pattern on a daily time frame. If you like this video, please press the like button and subscribe to this channel to get the more latest updates. Before entering into this video presentation, I request everyone go through the disclaimer once. Trading in any financial market involves substantial risk of loss and it is not suitable for everyone. Trading is a challenging and potential profitable opportunity for those who are educated and experienced in trading. Before deciding to participate in market, you should be carefully consider your objects, level of experience and the risk appetite to the risk and the reward ratio. My sincere advice to those who are not able to afford to lose, please stay away from the financial market. And I am not recommended to buy or sell of the stock, future and option any other financial instruments. We are not guaranteed for the exact profit or loss that are discussed during this video presentation. Before taking any swing trading, daily or positional trading, please do your own individual research or take the help of your financial advisor. According to our financial objective, we are not responsible for any kind of the profit and loss occurring during this video presentation. And the candlesticks can give an important information about like who is dominated of the session. Each candlestick that is informed tells you the story about the battle between the bulls and bears who dominated the particular session or the selected time frame and who won at the end and who gets lost. And the State Bank of India made an inverse head and shoulder pattern on a daily time frame from April to the June 2020. You can see the volumes are green and red lines are dried up during the formation of the left shoulder and head. And also note the sudden interest of the buyers in the stock in the month of June and July represented by an increase in the volume. Kindly make a note of it. The chart pattern is at the important juncture of 195 to the 200 kind of the price level. It is very important juncture that there is a neckline. If this neckline crosses, then only consider as in a bull. If it does not cross this neckline, then consider this chart pattern is void and ignore. And if you observe over here, there is a hanging man candlestick pattern has formed over here, and this candle close is less than the open during an average or the long range day. The lower shadow, this is the lower shadow, must be at least twice the length of the real body. This form is called as a hammer. And then moving on the next, on the neckline, an interesting bearish meeting line is formed when the blue candle is followed by a gap and the red candle on the opening of the day but declines to the close at the same price. At the end, it has closed almost near to the close of the previous candle. Meeting line are sometimes called as a counter attack lines. The bearish meeting line is almost like the dark cloud cover candlestick pattern, except that the bearish meeting line, the current close is at the same price and the close of the previous white candle. When the price action bearish meeting the candlestick pattern occurs in the uptrend, this is the uptrend, and you can see the trend reversal because the buyers are not in the control market and the sellers are trying to push the markets to the lower down, and the bearish engulfing pattern has formed and continues. You can see the bearish engulfing pattern has formed over here. Even important of the same again at the important juncture. Bearish engulfing is a 2-day bearish reversal pattern and the two opposite colored real body distinguish it. In a bearish scenario, the second day of the red candle must be total engulf the first day of the blue candle, and the shadows are not important here. And the rules for this identification, it should be in an uptrend, must be in progress, and the first day must be the blue candle, and it can be any color based on your choice. And the second day openings within a gap above and the real body of the blue candle, but declines sharply to the close below the real body of the first candle. In other words, the second day real body completely engulfs the first day of the real body, and the shadows of either day are not important, but the color of the second day real body must be the red. And another important is what exactly the importance of the neckline. As with the head and shoulder pattern, the neckline defines whether or not the pattern is complete and therefore has any meaning. As with the other line is the technical analysis. The neckline represents the line in the divides the bulls from bears. Along the line itself sought the equilibrium between the bulls and bears. Above the line represent the strength and hope the further the price move further. The trading line represents the weakness or fear. The neckline has 5 unique touch points. The first is the on the left side of the left shoulder, and the second is the right side of the right shoulder, which also has the left, and the third is at the right side of the head, is the fourth is the point in the right shoulder at which the price breaks the neckline, and the fifth point is the price retrace back up to the neckline before falling hard once again. And the bullish engulfing, here is the bullish engulfing bar pattern tell us that the market is no longer under the control of seller, and the buyers will take the control of the markets when a bullish engulfing candlestick pattern formed in the context of uptrend. It indicates a continuous signal. When a bullish engulfing candlestick formed at the end of the downtrend, the reversal is much more powerful and it represents the bottom. Here it shows us clearly that the market changes the direction after forming of the bullish engulfing pattern, and the price is trying to cross the 200 mark at the neckline of, and it has formed the inverse head and shoulder, but immediate on the last day of the closing it once again formed the inverted hammer. And kindly note, try to buy above that. Once it is crossed, then only consider this pattern. If it does not crosses, I request to ignore this chart pattern. Though if it crosses over here, you should consider the next price target levels as an 211 and the 215, and the final target as 220. The strict stop loss has 190. Why the stop loss recommended? Because stop loss will always keep your money control. So this is what I would like to explain about the State Bank of India and its chart pattern on a daily time frame. Thank you guys. Thank you very much for watching this video. I hope you enjoyed this video. Stay for more updates. Thank you and have a good trading.